We're back.
We're back again.
So today will be interesting to talk about what would you say the current state of affairs of the insurance industry in California?
Yes,
That's a mouthful.
the current state of affairs of
Yeah.
the insurance industry in California.
Yeah, what's happening in the insurance industry? And you have had insurance agencies for close to 40 years.
Yeah, 38 years and a half and
So
counting.
so you're actually feeling the changes that are
Yes.
occurring now. And can you walk us through a little some of what are the changes?
Sure. So, there have always been changes in the insurance industry, just like there's always been changes in real estate or any other industry. Okay. And there are ups and downs all the time.
Yeah.
I've lived a couple of them. But right now we're feeling a little tightening because a lot of the carriers are not having, let's say, their profitability ratios looking good. We're
So carriers being the insurance companies out there are not they're not making profit.
right, especially out of auto. Auto insurance is just not working out for them in the state at the moment. There are a lot of losses, and the increases that are being allowed by the Department of Insurance is not keeping up with the losses. And so there's only so much that you can take, in terms of a business, okay? Traditionally, insurance companies have been extremely strong. They have good investments. They have good returns, okay? So that's another aspect of what they rely on. But what's happening lately is we're getting calls from carriers, insurance carriers, saying, hey, our underwriting guidelines are getting tougher and tougher to write business in the state. And so some carriers are leaving the state, okay?
Yeah.
Just yesterday, I had a conversation with one particular carrier that apparently got a very healthy, allowable increase on their rates.
Right.
And yet, they're still cutting back tremendously on the appointments that they provide to brokers. So, everybody's feeling it. And I had a really nice conversation with one of their reps. And I told them, look, I know that you want to cut back, but this is a time where I could potentially put a lot more business with you because of the restrictions that are being provided by all my other main carriers.
Mm-hmm.
And if I can't place it here, I'm going to try to place it there.
Right.
And you're there. You are my there. And yet they don't particularly want the business. They anticipate that what they shared with me, and this is a regional vice president, he said, hey, I think we're going to lose money all throughout 2023.
Wow.
And I don't see it turning around in 24. So we can have this conversation again in 2025. So, when somebody that's in charge of a large area for a big company in California speaks to you that way, it really turns your wheels because,
they're bracing themselves for a couple years of difficulty.
So how many businesses do you know that are anticipating that they're going to lose money for the entire rest of the year?
Mm-hmm.
And potentially they are anticipating that they're going to lose money for 2024.
Interesting.
Who can take a hit like that?
Yeah.
Not many small businesses can.
And you said they had just gotten a recent raise, so they were able to raise their rates. So
Yes.
the way I understand it, correct me if I'm wrong, is an insurance company, carrier, goes to the Department of Insurance of California,
Mm-hmm.
and they say, hey, I want to raise my rates.
They
because
request it.
And I want to raise it 10%.
Right.
And then the Department of Insurance comes back and says,
Nope.
no, or yes, or a different amount, right? Because I've also seen where they requested too high of a rate increase and then they get a lower rate increase.
Correct.
5% or whatever.
6.9%. It's about the average.
And it's
There's a
that
lot
every
more
couple
involved
years, right?
for
That's
a year.
every. Oh, it's one. It's every year they
You
can.
can, you know what? That was, I think, changed recently, but I think that you can apply shortly thereafter. But it's a process that takes a year and a
It
half,
takes
two
time. Yeah.
years. It's not a quick thing.
Right.
Okay. And there's a lot involved in that process, which I'm not too familiar with, but I think you have to turn in financials and you have to disclose many things so that
Basically,
you
you
can
have
get the
to.
blessing from the
Right.
Department of Insurance.
So, which is interesting because a lot of people think, oh, give me a better rate or this or that on insurance. But the reality is the rates are determined by the state of California as far as how high somebody can, an insurance company can
It's
charge.
regulated.
It's regulated.
Yes.
And then that insurance company goes and does their formulas and then charges their rates.
Right. And you have underwriting guidelines,
Right.
which are very tough nowadays.
Right.
You
Because
can't.
companies want to write less business, it seems.
Correct.
We know of a huge company, also in California, that has basically structured their compensation model for this year to favor retention of clients. So just keep the clients that you have and a very good loss ratio. So less claim payouts, the better. And they're rewarding those types and not necessarily rewarding the new business,
No.
new acquisition. Which, so from an insurance point of view, it costs a lot more to get a new client than it does to retain a client
Correct.
from a business. But also, that new client is seen as a bigger risk, it seems, to the insurance companies right now in California, as opposed to the clients they already have on the books.
Correct. And there's a big insurance carrier in California who, like you say, has changed their compensation structure,
Yeah,
paying minimal for new business,
right.
which deters the agent from writing it.
Correct.
Because why would you write something if it's really, really low compensation for the amount of work that you have to put in? So then anybody that's a business person is going to concentrate on what is going to provide them a better living, which is in this case retention.
Right.
Okay. And you got, companies that have left the state.
Yes.
We just had a podcast with our friend Peter, and a huge company left the state of California
Right. Altogether.
altogether. They're still doing business in other states, but they decided that the business atmosphere in California was not conducive to producing a profit, and they didn't see something in the short term. And so this is a major carrier that left the state completely. And like that one, there's quite a few.
Sure.
But not such a big a name, but there's a lot of people leaving.
Or they don't leave entirely, they just
Curtail.
they make it more difficult to write business. Or
Correct.
they change the compensation. So that's very interesting because Peter, and I thought it was interesting, he said, I think the number 5 economy in the world.
6. Yeah.
One of the top economies in the world,
Correct.
California.
Right.
You have a huge company that doesn't want to do business in that state. What does that say about that state?
Yeah.
The current state of California.
Correct.
Which is interesting. And, everything... Look...
there's got to be a balance.
And for those who don't know, which for me was interesting because this was before my time, before car insurance was made a law in what year? Was it the
I was in
70s,
business.
80s?
Yeah, it was
In California. Car insurance.
It was in the 80s because I had just opened up my business, so they made it a law. I think in 1988 or something.
Yep, 1984.
84?
So the California Supreme Court upheld the 1984 state mandatory auto insurance law. So, it's interesting because we know of agents that were in business. 84 was a little bit before you, right?
Well, yeah, but I remember I had just opened, and so I don't know when the law. I'm not quite sure about this, but I think that they actually implemented the law or activated the law or something. It was in the books, it was in the works, but I remember shortly after I opened, which was in 86, everybody by law, so something happened, at the legislative level that said, hey, you got to get insurance. Because I remember shortly, I didn't know anything about anything. I had just opened up the business, and shortly thereafter, we were writing a lot of car insurance, especially through the assigned risk program.
Okay.
And it had become like mandatory all of a sudden.
So I just looked it up again. So it says it was mandated in '74, and it was upheld in the '80s.
Yes. So it was after 86.
Yeah.
Because I opened up in 86, so it was shortly thereafter. It's either 87 or 88, I'm not quite sure.
And we know
which I should know. But.
We know an insurance broker friend who said, I remember him saying that people were literally lining up around the building.
Yes.
Like to get insurance because it was a law. Oh my gosh.
Yeah.
Can't imagine that time. It's just, I bring that up because right now California is going through a difficult time in terms of insurance companies.
Yes.
And for new insurance agents, see, we had an insurance agency we opened in 2009, I think, or 10?
2010.
Right? And we had to write new business.
Right.
And it's very difficult to get that going from the very beginning. You had to go out there, meet people, network, drop off things on doors, like Peter said on the previous podcast.
Yeah,
he was leaving door hangers.
His public relations was his mouth.
His social media was
his
mouth, because back then there wasn't. And
but so, he can talk, so he's got no problem.
Yeah, and so it's difficult. So for a new agency, I don't know how. I wonder how they're going about, like brand new agent starting. How are you writing business when the companies, or many of the companies, don't want to write business right
Correct.
now? And I think it's part of it because during the pandemic, there was like a freeze on rate increases to insurance companies.
I believe that's correct. And so what happens is this, look, so people that are established are going to be in a better position to weather this storm, let's say, okay? Yeah. Like I said already, there's always been ups and downs. So I don't want to discourage anyone from looking into the insurance business. There's a lot of people that have a lot of vested time, in trying to become an insurance agent or so forth. And, there's a lot to being an insurance agent. You have to learn your products. There are different products with different carriers. I mean, you can study yourself into the ground, okay? And at some point you have to realize, I cannot know everything, okay?
Yeah.
And then you do the best you can with what you've got. So in a way, you have to stay positive, because you could go down a very negative road.
Sure.
Okay?
I think that's good you bring that up. Because
I do, because when I talk to these representatives from different carriers, okay, they are all depressed out.
Oh, not the agents, the representatives.
No, the regional president or vice president for this, company that handles X amount of cities in California. The other one handles X amount. And, the different carriers overlap each other to a certain extent. I've had a lot of talks in the last 2 weeks with some of these
corporate individuals,
right? Yeah. And
they're delivering the bad news.
They're delivering the bad news. They're all bummed up.
They're probably getting beat up too.
They're getting beat up by everybody. And I make sure to end the conversation on a very positive note.
Sure.
Let's tighten our belts. We're all in this together.
Yeah.
We're going to survive it out. But they're taking the appointment away, or they're taking the ability to write business.
They're making it more difficult.
So, I'm sure I'm messing with their heads to a certain extent, because this is the only conversation that ends in a positive, because you cannot, if you're a new agent and you're restricting the appointment by increasing your underwriting, okay, making it harder, okay,
Yeah.
to write business, or you're taking the appointment away altogether.
Right. Right.
You,
Yeah.
it cannot be. You're taking food from the table of that particular insurance agent because
Yes.
I need to write business in order to make money.
Well, absolutely. I can speak firsthand on that. We're talking about the auto and the home insurance
Correct.
industry, car, home, condominium, all that stuff, which is different. That's PNC. It's different than the life insurance industry. But I dealt with that firsthand when the pandemic hit and I was in the life insurance industry. All of a sudden, there's this something going around that no one knows what it is, how it is. So there's a freeze, a moratorium, which is a very common word that's used in the insurance industry. A moratorium in these brush areas, a moratorium in, you can't write business, basically, is what that is.
It's incredible. Well, you can share it with our viewers.
Yeah.
You took a hit in revenue. We can share it. You're not in the insurance business.
Yeah,
You're
no,
not in
I
the
mean,
life.
it
was
was
what, 36% or
no,
40?
it was like a 50% hit overnight in revenue because I was dealing with new business. It was new clients I was
New
bringing
business
on.
oriented.
It was mostly new business because I didn't have an established book of business yet. And when the moratorium came, because the insurance company is saying, hey, we don't know what's going around here. We don't know what this is. We're just going to make it a lot more difficult for you to write and get an approved policy on a life insurance policy for a client. Basically, the way that I saw it was only if you had pristine health, you were getting a policy in that time.
So you took a 50% revenue hit.
Oh, yeah.
In other words, if you were making $100, all of a sudden you were making $50.
And you got the same fixed costs,
Yeah,
which
you
is
have
what
employees. You had several employees.
employees, you have all the different platforms you're paying for, the internet, the bills, the rent,
everything. So you're the prime example, even though it happened during the pandemic,
yeah,
of what potentially could be happening to new agents today.
exactly. Yeah, yeah. It's how do you pay the bills? You know, and what was very difficult for me is that I had built up a huge pipeline, a bunch of people that I was putting into the system, getting them insured. And then all of a sudden, I got to say, hey, yeah, last week you would have been approved.
Oh, my goodness.
You know, like I'm thinking of that. Last week you would have been approved the policy. But today, I can't write you. And that's very difficult for me to do because... you know, because I understood the underwriting very well, I became very good friends with them. I mean, I was sharing with our friend Milton, which we're gonna meet later on. I would call the underwriter. It would be 7-8 o'clock at night. I kid you not. And I had like his direct number, and this gentleman, Mr. Bird, would answer the call, and he would say, "Oh, what's the age of the client? What's their medications? What's their health history?" I'd had everything laid out perfect for him. Oh, go ahead and quote him a table 4, a table 8, or whatever. He gave me the quote so that it was an accurate quote, so I can go back to the client and say, "Look, here's your health history. This is what we can offer potentially." And so, you know, I was asking about that gentleman because can you imagine 7-8 o'clock at night? And I think they're in the East Coast. I think
they are in the East Coast. So it was you know, it was 10 o'clock over there.
And he was answering
potentially. You know, that's the thing. You know, we're all in this together.
Oh yeah.
The consumer, the person out there on the streets,
the agent,
the businessman, the agent,
even the insurance companies,
and the staff. My staff is having to talk to people, and people are frustrated because we can't write a business that we would be able to write before. Overnight. So the staff, you know, of every insurance agency, my staff is going through a lot in trying to parlay, let's say, you know.
They have the difficult job.
You have a difficult job because, you have to use the right words in
And
You know,
it's across the board. It's not
it's
one company. Like one thing that is new that I had never seen before, you have to pay for a policy in full. On a new business policy, you have to pay a year or 6 months in full. I had never heard of that. It was always you pay each month, when you start a new business policy. Or another thing is like there's a hold time potentially with some carriers on getting approved. When before I would, you could call from the dealership, I need an insurance policy. Oh, send me your registration, whatever. Boom.
boom.
Now that doesn't exist anymore, or with some companies.
Right.
These are the changes that are taking place because insurance companies are not profiting, right? That's what it comes down to.
Right.
And so they're trying to plug the holes, I guess, in the ship.
Yeah.
You know?
And so what happens is, traditionally, the word on the street for the common man like me, let's say, you say, oh, insurance companies, they're filthy rich. And the insurance companies own all these massive buildings and own this and that and whatever. Yeah. And insurance companies are a tremendous building block of our economy.
Yeah.
But what's happening is that everybody's getting hit because our economy is being shaken up by many, many, many different factors.
Right.
Okay? The dollar is losing value because of what's happened internationally, and that is a whole different monster with all these BRICS being formed and potentially not being the reserve currency of the world, and you've got different countries that are our allies doing things that
you have inflation.
You have inflation.
The
so we could talk
rates.
about. So everything is contributing to the times that we're living today, which are a little bit difficult, and we all have to stand together and tighten our belts.
Tighten the belt.
Because we've enjoyed many years of
good years.
Many.
I remember,
and these are a little bit more difficult times. We just need to work together, all of us, as a whole.
Yeah.
Everybody. And I'm talking about everybody, the person on the street, the insurance companies, the insurance agents, the staff. Everybody needs to come together to weather this storm. And, it's going to pass because traditionally, you go up and down.
That's what
the economic cycle.
I remember, seeing, every 8 years, every 10 years, there's a correction. But we went a long time without that.
Correct.
Without that correction.
But I'll tell you, it's interesting as I'm speaking to some of these reps from carriers, okay, that we represent. And it's a very it's not a pleasant call. It's not a pleasant call.
Yeah.
Because they are forced to do things that they don't want to do, and some of them you can feel the pain over the phone, and hey,
Yeah.
But to a certain extent we create our own economy. So what does that mean to a person like me? Okay, an insurance agent that owns an agency. Well, if I was working, 8 hours to obtain this goal, then I'm going to have to figure out how to obtain this goal by doing either different things or working 16 hours. Now, working 16 hours over 8 doesn't guarantee you that you're going to get your goal. What we need to do is figure out where the cracks are in the system and try to see how we can, at our own little level, because these things that we're talking about, we have no control over to a certain extent. Yeah. And the things that you have no control over, if you start worrying about these things, you're going to run yourself into into a medical office.
You have to get creative.
For treatment or something.
Difficult times lead to innovation.
You have to figure out.
Necessity is the mother of invention.
Correct.
So that's what it's going to lead to. People trying to create another avenue, and they'll be all right.
We'll weather it together.
Yeah.
You have to figure out what it is that you can do. I was listening to a podcast this morning, super early. I get up very early in the morning. And I was listening to a podcast, and the guy was saying, "Well, look, do I need to go into Starbucks and pay $5 or $8 for a cup of coffee? Maybe I can make my own coffee at home. Do I need Netflix and Prime Time and this and that and
Yeah,
all
start
these
cutting
things?
out some
Or
costs.
maybe I can just cut some of those
I agree.
and do
I agree.
so, and then look, we need to look at what debt do we have? How are we gonna weather the storm?
Yeah.
Potential recession, whatever it is. What debt do we have? Look at the debt that we have. Look at the one that's costing us the highest in terms of interest rate and attack that one. You know,
Yeah. Yeah.
and get rid of that. If you have debt at 18%, if you have credit card debt at 21%, 20, whatever it is, the credit card debt, attack that debt and try to bring the highest interest rate debt that you have accumulated down somehow.
It's
Because
definitely having to change the certain lifestyle. It's like you said, Netflix and different
yeah,
things like that that one gets used to. It's having to make changes to it
right.
because
One guy was saying, "Hey, I'm gonna have to let my gardener go, and I become my own gardener."
oh, that's cool.
Well, he was paying
You get a little
$150
physical
a month.
activity.
He was paying $150 a month for the gardener. So now he says, that's $150 that I
That's
can
cool.
use to put food on the table. Okay, so I'll sweat it out a little bit and I'll do my own gardening. Uh,
Yeah.
there's certain things that we can.
Yes.
So,
Car washes, just hit it with a manguera.
yeah, just do your own, clean your own car. But
Oh.
so what I'm trying to get at is there's things that are beyond our control
Yeah.
that you can go crazy over. So let's concentrate on what we can control,
For sure.
and make the best of what we got. Let's play, it's playing poker. We're playing poker, you know. It's a very good example because let's make the best hand of what we got, and depending on how you play, and very well, not necessarily the best hand wins all the time.
Right.
It depends how your opponent is playing the cards that are on the table and when and how.
Right.
I've seen a guy fold, with a straight when the other guy only had a pair, but it was in the actions that he took that made the other guy think. So let's play the hand we have. Let's control what we can, so that we can.
So to wrap
Because
it
these
up,
are rough times.
yeah. So to wrap it
They're
up,
tough times, man.
maybe you can share that fun story of you being in the insurance industry, and it was at one of the schools that we were going to, and there was this tree that you thought was like falling over or something, and so you took it to administration.
Okay, so this is where the school you guys were going to, and then when you're in, it's just like whatever field you're in, you kind of like start developing an eye for things. So anyway, quick story. It was a school you guys were going to, and I come in the morning and I get in the parking line, and then while I'm waiting there to get you guys off to your teachers, I see this tree, and it was this branch that was coming out really, really right off the tree, like at a tremendous angle. And I thought, that thing's going to fall. It's going to hit one of the vehicles. So, later on, I came a little earlier to pick you guys up. And so I went to the administration. I said, hey, guys, you know what? You should trim that tree because that branch is really at an angle. And I don't think it's very strong. I think it's going to fall. And they said, oh, Mr. Pomas, you just, here you go again. Because I always gave them ideas, okay, on how to make the school more secure. I came up with an idea about putting a gate in an area that I thought was exposed. And anyway, and so what ended up happening is that about a week later, I kid you not, maybe not even 8 days, 9 days, the branch actually fell and hit a car, and they got involved. Yeah, hit a car, and they got involved in a small claim. Okay, and I remember the principal saying to someone, we got jinxed. He came in a week ago. Let's pay attention to what he says every now and then.
That's funny. Yeah.
So, but
But that's yeah, as an insurance agent, you're always looking at what is it?
The risk,
The risk.
potential risk,
Yeah. What's the name of that?
mitigating risk.
Yeah, there's a name that slips my mind right now. But you're basically always looking at trying to minimize the risk.
Minimize the risk. That's what you do for a living.
Yeah.
And so,
Yeah.
and
So,
when you're writing a homeowner policy, if the
yeah.
trees are touching the roof line, you want to
Those-
cut those trees back
Yeah.
because they're going to weather out that roof line. Or potentially, one of the big things that a lot of people don't think of is the rats. If you have rats, they use it as a bridge. So now they can go up the tree, up the branch. It's close. You'd be surprised how far rats can jump. They jump on the roof, and now they start nibbling on your shingles.
Oh,
Here
man.
comes the rain. I mean,
It
we're
leads
getting
to a bunch of
sidetracked,
stuff.
but we're going through tough times.
Yeah.
Together
But
we can work
but
it out.
that I think is good information on what's happening currently firsthand from you owning agencies in California and what some of the things that you're dealing with. And also we know a lot of people in the industry in California.
Yeah.
And so
Well, I'm all in.
you know.
I'm all in. So this, whatever hit comes, whatever hit we're taking,
Mm-hmm.
I'm all in on,
Yeah.
on this. So I'm vested in this industry. So I've got a lot to lose.
And I
Okay,
think
if
it's a
things
good
go south really bad. So I'm grateful that we can still write
yeah.
some business with some carriers.
And it's a good perspective because you've been in the industry almost 40 years.
Yeah.
So you've seen a bunch of changes. So
Yeah.
thanks for sharing.
Okay.
Cool.
All right.
Wrap it up.